Hello everybody, welcome back to the channel. I have an amazing video for you guys today. If you are in the market to buy a house, sell a house, or if you're just in the rental market, you're not going to want to miss out on this article. Now it is from Business Insider and check this out. The title is "A 2008 style housing market crash is coming, senior economist warns." That is a huge statement. This is a 2008 style market crash. Now I've been reading a lot of articles. A lot of people are downplaying the housing crash. They're saying that it might not even happen. And for this person to write this, I mean, let's take a look and let's read a little bit about it. And I'll kind of give you my thoughts as we go along. The housing market is starting to cool off as mortgage rates rise. José Torres of Interactive Brokers warns that steep decline in home prices are ahead. Torres expects the decline to play out over the year ahead. I kind of agree with that. I do definitely see a big housing downturn. For José Torres, the supply and demand dynamics in the housing market are moving in such a way that it creates a perfect recipe for home price declines. On the supply side, in order to catch up to skyrocketing demand during the period of low interest rates since early 2020, the homebuilders began putting up houses across the country at a rapid pace. Even though housing starts, marked by red line below, have started to fall, they still remain at elevated levels. Right here. So this is the housing starts, is on the red. Wow. The housing inventory was also up 18.7% year over year, according to Realtor.com, and that has risen around 50% since the start of the year. But as the free money environment helped to fuel 41-year high inflation rates at 9.1%, the Federal Reserve has also pivoted hard this year to a more hawkish stance, causing mortgage rates to nearly double. Additionally, the 30-year mortgage rates have climbed as much as high as around 5.8%. That's huge. It's such a huge climb after starting the year at 3.1. That is, that's crazy. That's killing demand. That's killing demand, basically. The perfect storm is brewing in a real estate market due to a near-decade high construction level and plummeting demand. Homebuilders said, "Geez, we're making so much money. There's so much demand. Everyone wants a house. Let's build like crazy." Now the Fed is reversing all that. But because they're admitting basically in their minutes and their meetings that they stimulated too much, but all that construction was starting, it has to finish. So it is misalignment of time between supply and demand. So basically, guys, we're gonna have a bunch of more supply hitting the market, and with the high interest rates, it's gonna make the houses just drop like crazy. That's what I'm reading so far. What do you guys think? Here, let me keep going. We're going to see something very similar to what we saw during the Great Financial Crisis. Wow, that's a big statement. He said he expects to see double-digit declines in early 2023. Wow, double-digit declines. And that's and said that the market would bottom when the Feds pivot to a more accommodative policy, which he expects to happen in the mid to late 2023. So he's thinking 1 year, guys. In 1 year, you are going to be able to buy a great house for a very discounted price. That's pretty amazing. Torres also said that he thinks home prices are going to come down so much because the Fed is just getting started on their quantitative tightening campaign, which basically means rates are going to keep going up, guys. They're saying rates might even double by the end of the year. This means that they've stopped buying new mortgage-backed securities. This could begin selling them. Right now, they own about a third of the mortgage-backed securities market. Whoa, that's a lot. That is a lot. If they start selling those, things are going to start, oh man, can you imagine? The central bank has been buying up these assets at a pace of 40 billion per month. Wow, insane. Wow, crazy. Another reason Torres is bearish on the home prices is because housing affordability has been dropping at an unsustainable pace. USB highlighting that the recent note showing that the housing affordability is at its lowest since 2006. That's a big deal. House affordability, guys. we can't afford the houses from our neighborhood. That is a big deal. At this point, housing is unreachable when considering household incomes and individual incomes. The percentage of the average monthly payment to household incomes and individual incomes is at record high, similar to the levels we saw during 2008 financial crisis. If there's any kind of layoffs, you're gonna see a lot of people, foreclose, and that's what's really going to bring the market down. Check this out. 62% of Boise homes have dropped their price. More than half have done so in Salt Lake City and Denver. So I don't think it's going to be a smooth landing. It's going to be a very bumpy landing. The markets that were the hottest have the furthest to fall. Whoa. Homebuilders sentiment posted its second worst month in the last 37 years in June, while housing starts had their worst month since September. Existing home sales in June were also down 14.2%. Mortgage Bankers Association said this week that they expect 30-year mortgage rates to stay at above 5% through the first half of 2023, and for existing homes to fall 8% this year from 2021. Still, some don't see severe, if any, price declines ahead. Morgan Stanley said in a note on Thursday that a constrained supply in the housing market would prop up prices. So here's another quote. Overall, housing activity continues to weaken as affordability pressures, rising inflation, and higher mortgage rates weigh on housing activity. Our economists have discussed how demand for housing has begun to wane, and it is expected to continue to weaken due to a tight housing supply and rising mortgage rates. Despite weakening activity, tight supply should keep the prices elevated. So you're right. I kind of see that. But I do believe that, if the economy starts to turn, people are going to want to take some profits and they're going to want to sell their properties. We'll see how it all pans out. So here, and the article ends, but I do agree with the supply and demand dynamics. Our inputs for what home prices do in the months ahead is being debated. For example, the Federal Reserve published a paper in June showing that prices gains over the last 2 years have been demand driven thanks to low interest rates. So guys, what do you guys think about this article? So, obviously, I do believe that the housing has become so expensive that the jobs are not supporting it, right? So the prices do have to come down, and interest rates, going up, it's going to help do that. But again, it has become, we're in a situation where, if we can't afford to buy a house, that's huge problems, for this country, because housing is, properties, real estate, it's how we build wealth. It's how we build generational wealth. You pass these down to your family, and then they could have that. If we lose that, then we lose so much. Okay, we basically lose everything that we have in this country. So hopefully things come down. Hopefully, we all get to realize the American dream, which is really to own property. So guys, hopefully you guys are saving. Remember, the best thing is to have a W-2 job, because you'll be able to get the lowest interest rates, and also, you need to have it for at least 2 years, because that's what the banks want. So just get ready, save your money, because if you don't have a house, or if you're looking to buy a bit bigger house, or if you're looking to buy a second house, I think that time is coming where we're going to have an amazing buying opportunity. So guys, thank you so much for watching. I love you guys. And by the way, if you guys do like these videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Thank you guys so much. See you in the next video.